Guys, welcome. Most CPAs won't even bring this up. And this is why I'm excited about this. And yet, it's one of the most powerful tax strategies a business owner can use. Today, Micheal is breaking open the equipment rental tax strategy. Never heard of this before, but now I have. Who qualifies? Why does it work? And how fast does the savings hit? You're going to want to pay attention to this one. Micheal, that's the key component in this thing. What exactly is the equipment rental tax strategy, and why does it save business owners so much money?
So, one of the most attractive in terms of responsiveness strategies that we offer out there. Most clients love this because it's easy to get in. They clearly understand it, and they also have an exit strategy built in. But here's what it is. Consider you're a successful business owner and you have positive cash flow and a lot of profits that you'd be owing taxes on. Okay. For considering and leveraging the tax code, specifically Section 179 and bonus depreciation. Section 179 has been in the code since 1958. It's been around a long time. It is not a loophole. Okay. But you can create a single member LLC, and that single member LLC buy certain types of rental equipment that will be used and be rented out with you and for you. You could oversee over time. All right. So this is a leveraged transaction. What does that mean? So oftentimes our clients are only putting down 10% of the total investment. So you need $1 million write-off. You don't have to spend $1 million. You can invest 100,000. We arrange for financing for the remainder, which is 900,000 in this example. And then you get the $1 million write-off. That fleet of equipment that you just bought will be rented out for you by another company, one of the largest companies in the equipment rental space. And specifically, what's going to happen is they're going to do a revenue share with you. So this is very much like an Airbnb strategy because it really is, right? So except the asset is not real estate, the asset is equipment, construction equipment. You're getting monthly rental income every month, and against your debt service, it's still positive cash flow. You're getting a tax deduction upfront for the purchase of the equipment. And here's the other part. At the end of 6 years, you're going to be bought out. So you don't have to worry about, well, how long do I have this equipment for? When it breaks down, all those things are taken care of. And your exit strategy is stated upfront. You're going to sell your equipment back to them at the end of year 6, and it'll be off your hands. Okay, so the question then becomes, do you still want to pay a tax? Because you don't have to. Here it is. For a fraction of the amount that you would have paid in tax, you can eliminate that tax, at least at the federal level. Some states do not comply with Section 179. But for a fraction of the amount, you can eliminate the tax, generate some positive cash flow monthly, and eventually get your money back. What tax? I mean, how does that compare to paying the income tax? When do you get your money back? It's gone once you pay the IRS. So more and more business owners and high W-2 earners are learning about this strategy. And every year we're overwhelmed with their responsiveness to this and their interest in it.
Wow. Who qualifies for the equipment rental tax strategy? Most people don't realize they do.
So I'm going to talk to two groups. Number one, if you're a business owner, we can use this equipment strategy to offset your entire taxable income, all of it, right? Ordinary income. That's the first group. And usually these are people who are in the $500,000 a year range or higher because the minimum, the minimum in our program is really more like $400,000 purchase. So if you don't have a need for a $400,000 write-off or deduction, this may not be the right strategy for you. Okay. But so that's number one, business owners. And number two, for the high W-2 earners, or what we call the high wage earners, this can offset in 2025 If you're married filing jointly, this can offset up to 626,000 of your taxable income, whether it's wages or passive income or a combination of both. You have up to 626,000 that you could use this program to offset. Very powerful for many, many people.
Yeah, and you wouldn't even think a W-2 earner as well. If they're earning a lot of money and this is their thing, could be a great opportunity for them to decrease their taxes.
And here's another point. I deal with a lot of physicians. You know, they're making 1.5 million, 2 million, 1 million, but they're like, is there anything else we could do this year beyond that? And there may be, but the point is this. If you buy more equipment than you need this year, then you carry it into next year as a net operating loss and beyond. That net operating loss can be used to offset up to 80% of next year's income. So while you have limitations really on this year, if you buy over and above, thinking ahead, if you have the capacity to do that, you should do that because you could wipe out up to next year, up to 80% of next year's income. Powerful stuff.
So, what is the most common misunderstanding about using equipment rentals for tax savings?
That they don't, that it doesn't apply to them. Most people don't know, like, wait, I can have an equipment rental company even though I am an anesthesiologist, right? They don't really equate the two, but not only is it, a tax saving strategy, but it's also a wealth building strategy. I know somebody who's been doing this for 10 years, generating $1 million a month now in tax-free income. They haven't paid taxes in 9 years, making nearly 20 million a year. That's powerful stuff. And most clients are not like that, Neil. I just use those things because they're eye openers and like, whoa, wait a minute, And when people see that, they're like, maybe that applies to me. That's my goal in bringing up those numbers.
No doubt. How fast can a business see real tax savings from an equipment rental strategy?
Well, you apply it this year, you implement it this year, you'll see it immediately in your next tax return. That's the answer, right? So consider all the monies that you've paid the IRS and your estimated tax payments. That comes back. So if you want to look at it that way, it's pretty fast, right? Either you're going to get a massive refund next year if you've been making your estimated, or you're going to save yourself a lot of money that you would have paid in tax. Either way, incredible, incredible and immediate benefits.
All right. If people are interested in this, they should go to rainstormmediagroup.com right now and schedule a call with Micheal today. Appreciate it, Micheal.
Thank you.
All right. That was the Rainstorm